we had kind of the last session finished with an air of optimism. I have to start with a bit more of a stark point on a real serious deterioration of a situation that Ed Balls mentioned yesterday when leaving. So for those who are interested, it was Norwich City 0, Arsenal 1. So I'm sure there might be some intense financial management and planning and provisioning going on there for those who are interested in that. So as has been flagged on a few occasions, ICAW has been doing some analysis of this exercise of whole-of-government accounts in the UK. It's part of a broader engagement that we have on public sector. We've been involved in public sector for many years and trained in the public sector, National Audit Office, etc., etc. But there's a growing involvement as we recognize, as I sort of ironically put yesterday, public sector is not a niche. It's a key part of the economy, and the interconnections between the private economy and the public sector economy are really clear. So we've been issuing quite a number of new important reports in that area. For example, CFO at the cabinet table, about getting that expertise at the level that you actually require, and then picking up on some of the themes that were mentioned earlier about the structure of your finance ministry and ensuring that financial information and expertise is really built into the policy making process. But for today, I wanted to particularly talk about whole of government accounts briefly. I'm really going to be reinforcing messages already made. I hope you'll forgive me for that. I'll flesh out a little bit with a few numbers here and there. I think it was already made clear yesterday in terms of how long this journey has been. I'm looking at Ian as I say this. You probably felt it was even longer than it was conveyed on this chart here. I thought it was interesting yesterday when we were talking about when it was legislated for and when it actually happened. So there you will actually see it was under the coalition government, really, where you had the first publication of the whole of government accounts. And I'm going to perhaps just remind everyone what that covers. It's a consolidated set of financial statements for now some 5,500 public sector bodies. I think the first iterations were around 4,000 or so, and that's now expanded out to over 5,000 on the basis of IFRS, which some modifications, but that's an interesting point in itself, and no doubt there could be views on that in relation to which standards will ultimately be the major reference point, but clearly that is a debate there. And also it was mentioned earlier about audited accounts, so let me say these are audited accounts, but that doesn't mean there aren't some qualifications. That was mentioned, I think, earlier in relation to the US. And you know, there's been a debate at EU level also with the EU accounts that actually qualifications can actually be a really good source of information there as well. So you'll see some qualifications in the whole of government accounts related, to example, for what's been included and what's not been included, with some challenges there. But to the extent that the exercise has been audited, I think we can say we can place some good reliance on these numbers, recognizing those qualifications. I'm going to draw attention to a couple of chapters which ICAW has written for the so-called green budgets of the Institute of Fiscal Studies. So that's a very reputable body, independent body in the UK, which publishes empirical work to help the debate on public finances and economic issues. Generally, we've had chapters in the last two green budgets. The first one we were dealing primarily with the whole of government accounts in itself, and the second time around we've actually looked a lot at infrastructure. I'm not going to deal with the infrastructure chapter today, but that's also interesting reading. Let me just also acknowledge two or three colleagues who have been really involved in the writing of those chapters. Ross Campbell, our Director of Public Sector, Robert Hodgkinson and Martin Wheatcroft are others. So if you want to engage with us, I'm sure they will be happy to do so as well. really, as a first, kind of what's included in there. So we do have a much more comprehensive financial picture than what is currently provided through national accounts, because we include recognition of charges for obligations which have been incurred and will result in financial outlays in the future. We have a revenue and expenditure account, profit and loss, if you like, and the balance sheet, and with some bridging there on cash flows, and also statement of comprehensive income, where you can see these movements, write-downs, write-ups, which I think was touched on also in relation to the stewardship of the state's assets. But let me move on. I said I'm going to keep this quite brief at what the information is telling us. And first of all, I should say we're looking at the information relevant to up to end of March 2014. So that's over 2 years old. That's maybe part of the problems, let's say. But what is it telling us? And I'm reiterating, I wanted to start with this slide. I'm reiterating points that Ed and Ian, I think, were making yesterday. Firstly, that we have had a impact of austerity. It's important to recognize that. So we have had a reduction of the deficit under both the national accounts in black there and also in the financial accounts in red. But as you can see, the red's bigger than the black, and on balance, on average, it's around 55 billion bigger in each year. And when we kind of consider how much reduction we've had in the deficits, we see that the reduction has been smaller for the financial accounts, about 20% compared to the 35% for the national accounts. So we have an overall financial accounting deficit of just under 150 billion. And when we take over the 5-year period, the accounting deficits, they add to about 1/4 of revenues, which even for a country of UK size is pretty sizable. Yeah. If we take the next slide, I'm on the so that was a slide I was hoping to have been on. If we take the next slide and we look at what's been happening over the 5-year period, we see actually we have been experiencing a deteriorating financial position for the balance sheet as a whole, which, just to say a kind of obvious thing, getting to whole of government accounts isn't the holy grail where everything is resolved, is it? It's actually understanding where you've got to. So what we can see over the period from 2009, 10 to sort of call it today, i.e. 2014, that we've actually got a deterioration in the overall total liabilities from 2.5 trillion to 3.2 trillion. And when we look at that as a percentage of GDP, because we've been talking about that quite a bit, haven't we? We're up to 177%. So all these discussions, there seem to be lots of different reference points and measurements, etc. But when we're taking then a financial accounting approach, the picture, as we've seen, is of improvement in the deficit, but still over time on the balance sheet a deteriorating position. And to put it another way, I think there was quite a lot of discussion on this, what the net position is for the country. We're looking at nearly £29,000 for each citizen in the UK in terms of net position. The main reason for this situation, I think overall the biggest element of the liabilities, which is not appearing in the national accounts, is the public sector pension obligations. So this is absolutely critical to the overall picture. It's primarily due to the fact that the bulk of civil servants' pensions or public sector employee pensions in the UK are not funded. Apart from the position of local authorities. I think that local authorities are in a much better position, I think, around 2/3 funded. And apart from some exceptions like the BBC, and you'd expect that from the BBC, generally we're looking at a unfunded pension schemes, which is pretty impressive, isn't it? Let me stress here, and I think it's already been made elsewhere, but I think it's important when we think about the longer-term sustainability of our countries and public finances, that we are not at all talking about the general state pension. And if we are thinking about that for a moment, and this is not an official estimate or anything like that, but I do hear figures of around 4 trillion being mentioned, and sometimes 5 and 5.5 trillion being mentioned. So let's leave that out aside for a moment from the whole of government accounts, because I think it's accepted that that shouldn't be in there, but as a kind of challenge in relation to longer term economic sustainability of our countries, I think we all probably have some issues to be thinking about there. There are other elements in the liability side, so things that we know and we're absolutely going to have to use future tax revenues to pay for, include, of course, nuclear decommissioning, as we've begun to realize that there are some ongoing costs which will certainly go on for at least 100 years or so, and possibly beyond that, and these are major liabilities that we have now been recognizing. There are also others, including issues around clinical negligence, where effectively the UK government self-insures for issues arising from the health service. So I'll just put everything up on the slide quickly, because then your eyes can work faster than my ability to say things. So it is important to give a positive message, because we do have far more transparency than we've ever had before. It's been a fantastic exercise. I mean, clearly keep people in the room directly involved in that, and we want to acknowledge that. That's been extremely good. But we also have to admit that there has been a reduction in the preparation time, as was being referred to already, but it's still pretty lengthy, and it does raise questions about the utility of the information as it's provided. So that's there are some signs of the use of this material in decision making, but there's still some way to go given the gaps in timing, etc. The overall, I guess, the economic challenge arising from these results is probably government doesn't have that much room for maneuver in the event of a economic shock of one kind or another, because clearly it's already has got major commitments for its future use of tax. So we do need to acknowledge progress. We do have to recognize there's need for additional improvement. I think you were talking about that, Ian, yesterday as well, or you and Paul and Ed, about perhaps different approaches being taken in different departments, getting the information together. That needs to be improved on, which is clearly very important. But one of the things that I think we all think about a lot more in the profession as we've been involved is to what degree are these numbers and these approaches being the principal language, if you like, for the dialogue, for the interaction with policymakers on key decision making. And I think there's still some way to go. Ed made some remarks on that in relation to probably some dual tracking at the moment, but when we think about how those financial journalists, various people have been talking about, they kind of seem to find it easier to talk about the deficit and debt levels a lot. And big question, as I was saying yesterday as well, about the EU policy is, while we remain on that, I think we're losing a really big part of the picture in relation to the true financial position of our countries. So that allows me just to conclude as the alarm sounds there, to reiterate, what I was trying to convey yesterday is we would like to see a reinvigoration of the EU policy drive towards a more holistic, a more faithful, a deeper a more forward-looking recognition of the financial challenges that we have. So centered around using international standards. I think Nicholas is going to talk about IFRS. I think we can say there's lots of lessons we can draw from how Europe has shown leadership in the world. Maybe that's difficult to say here in LA, but we do see a lot of advantages of how Europe has championed international standards in the private sector, and we want to see that in the public sector too. And I'd love this summit to be part of that. So Greece is massively important, and individual countries are massively important in moving, but to have the EU say, this is what we need to do because it gives us a better understanding, that's what we would really like to encourage and work on. So with that, I hope to have done justice, Ian, in particular, as you were in the engine room, to at least some great work there and conveyed some of the results there. It's fantastic one in that direction. It doesn't give us all our answers. It just tells us that we've got a lot of work to do, and the best way of having good public finances is having a well-managed economy, and the two things come together. So thank you.